CFD is suitable for you if you would like to capture some short-term opportunity. Of course, because the margin involved, okay, you can make a lot of money, you can also lose a lot of money. So that's why it's suitable for you if you are a high-risk investor, okay? And it is definitely not for a beginner. It is suitable if you are a sophisticated investor with advanced trading skill. You see, in Malaysia, it's not this CFD investment is not available to retail investor. You need to be qualified as a sophisticated investor. For a retail investor, it means that you must have more than 3 million personal asset net worth. Then only you're qualified to trade CFD in Bursa market. Just like I mentioned about eToro platform, if you are aware of that, SC, if you go to the SC alert list, SC Security Commission or Bank Negara has specifically put it that eToro is not licensed by Malaysia. Okay, so any Malaysian who invest in CFD on eToro platform, if they were to lose money, so it's very difficult for them to get the help of the regulator to claim the money back. It's very important for us to find out what is the underlying investment. Is it a direct bond paper or is it a bond fund? Okay, if it's a bond fund, whereby then there's certainly there will be a bond fund manager. Okay, so then what we can do is that we can compare this bond fund performance to the peers of the other bond fund manager in Malaysia to see like what I shared with you just now, the performance comparison table. Then we'll be able to see for past 1 year, 3 years, 5 years, how do they compare to their peers. Now, if the underlying investment of this fixed period investment is a direct bond paper, then that is even more challenging because you do not have a professional fund manager to help you to select the bond and to trade the bond when necessary. So for that matter, you need to do your own due diligence to really understand the background of the bond issuer. I would say this kind of research is no less than doing research to buy a stock. So that's why I would say that to buy direct bond is always a tricky part. And personally myself, I never subscribe to buy one direct bond paper for my own self because to me, there's no reason for me to spend so much time to research one bond paper and at the end put a big chunk of my money, say 250,000 into only one paper. So I would rather that the 250,000 that I have got is spread into maybe 10 different bonds because bond, even though the risk is relatively lower, but over my 20 years of experience, every few years there will be some papers, for whatever reason, go into default and downgrade. And so if I have got 10 bond paper into my portfolio, if one bond paper get into trouble, I still have got 9 bond paper can do well and to support the profit and the growth that I'm expecting. REIT investment is an investment which is attached to property. But the key thing again is about diversification. The challenge of any property investment is that if you have only invested into a REIT which is situated in a country, in a certain sector, and in certain location, chances are you may need to ride through a certain cycle, which is good or bad or up and down, for that particular piece of property. If you were to invest into a pool of REITs, then your investment experience, your investment performance will be much improved.